Hello everyone. Today in this video I will try to do the quick revision of Unit 1 Introduction to Management Accounting. Let's start. These are the content that we have to study in Unit 1. The first point about the meaning of management accounting. So, management accounting is that field of accounting which deals with providing accounting information to managers for their decision making regarding planning, performance, evaluation, control and other managerial aspects. The next is definition of management. The most popular definition of management accounting given by the National Association of Accountants. According to that association, management accounting is the process of identification, measurement, accumulation and analysis and preparation and communication of financial information or financial statements that used by management to plan, control and evaluate the organization. Next, the origin of management accounting, that is in the 1950. The most important question for 4 marks, that nature of management accounting. So point number 1, useful in decision making. Management accounting is very useful in decision making, decisions regarding our futures. Number 2, management accounting use the information that is provided by financial accounting and cost accounting. Number 3, internal use. So management accounting is only useful for internal parties like managers, employees, laborers, top management, all this. It is not for external users. Number 4, it is purely optional. It is not mandatory to prepare every year as per the rules and regulations. It is purely options. As per the requirement, company can prepare. Number 4, it's concerned about the future. It is all about the future preparation. It is not about the past data presentation. And last characteristics or a feature of management accounting is flexibility in presentation of information. There is no any specific format. You may prepare the formats and statement as per your requirement, as per your convenience, as per your understanding in different presentation mode. This point is about scope of management accounting. First one, financial accounting. Here financial accounting provides all the historical data for the future plan. Number 2, cost accounting. It provides various tools and cost data about the processes that help us in the decision making. Number 3, forecasting and budgeting. So as we know, management accounting is all about the future. So here forecasting means estimation of future costs and benefits, and also we prepare some budgets for control purpose. Next, tax accounting and tax planning. As we know the future incomes, so according to that income we can plan our investments and savings, and we can plan our tax liability also. Next is internal control and audit. Here in management accounting, each and every department have to prepare their statements individually. So by looking at statements we can control the various departments, and that's why one of the scope of management accounting is internal control and audit. Next is cost control processes. In management accounting we have so many tools or techniques for controlling the cost. We are using that techniques in management accounting. For example, budgetary control, standard costing, marginal costing, all this. The next one is financial analysis and interpretation. Here management accounting also help in doing the analysis of financial statements like ratio analysis, control statement, case post statement, trend analysis, all this. So this is what scope of management accounting. The next point is reporting to management. Here each and every department have to report their statements to the top management. And next one, office services. As we are preparing the separate report for each department, so all the departments have their own record. Okay, so they also provide some office services like filing and copying of data and communication of data. And last one, statistical tools. We use some charts, graph and diagrams, okay, in management accounting as a tool. Next one is objectives of management accounting. As we know that it is all about planning and policy making. It's help in decision making. It's provide information to a management for a decision makings. It's help us a top management in controlling the various departments. It's provide the communication between various departments, and it's also establish the coordination between various departments. Okay, and the management accounting also help in improving the efficiency and effectiveness of operation and management, and it also help in interpreting and analyzing the financial statement. So these all are the objectives of management accounting. Next one, the functions and objective, we call both are same. There is no change here. All the points that we have discussed in the objective part, these are repeated. Next one is limitation of management accounting. The first limitation, the accounting information is provided by cost and financial accounting. So the management accounting is purely depend upon the data provided by financial accounting and cost accounting. Management accounting has a wide scope, so sometimes wide scope lead to the inaccurate results. Number 3 is costly system to install and implement. Number 4, it is in evolutionary stage. Okay, it is in new stage, it is not completely developed, so some limitations are there, and sometimes your managers and employees are not ready to accept the change. Next one, the difference between financial accounting and management accounting. So financial accounting is purely for external users, whereas management accounting is only for internal users. In financial accounting, we use double entry system. In management accounting, we have so many systems like standard costing, marginal costing, budgeting, and all other methods are there. As per the rules and regulations or statutory requirement, financial accounting is compulsory, management accounting is not compulsory. In financial accounting, we mainly focus on a profit. We try to analyze the profit. In management accounting, we try to analyze both cost and profit. Financial accounting is all about past data, whereas management accounting is about all future data. In financial accounting, periodic reporting is compulsory. In management accounting, it is not compulsory. For preparation of financial accounting, we use some accounting standards, but in management accounting, no accounting standards are there. In financial accounting, we mainly prepare profit and loss statement, balance sheet, and cash flow statement. In management accounting, we prepare all the statements as per the requirement of department or organization. In financial accounting, the publication of annual report is compulsory and audit is also compulsory, but in management accounting, both are optional. And financial accounting is mandatory for all the companies, but management accounting is not mandatory for all the companies. Whereas the last point, financial account record only the monetary transactions, but management accounting record the monetary plus some non-monetary transactions also. Come to the next part. Difference between cost accounting and management accounting. The scope of cost accounting is limited to calculation of cost only, up to the determination of cost of a product or a service, whereas the scope of management accounting is not limited to cost only. We are also looking for the profit. The main objective of cost accounting to determine the cost of a product or a service, whereas main objective of management accounting is to provide the accounting information to the management for decision making. In cost accounting, we are using some techniques called as job costing, batch costing, process costing. In management accounting, we use budgeting, marginal costing, standard costing, and all cash flow statement, fund flow statement, all this. Due to some limitations of financial accounting, the cost accounting come in the picture, and due to some limitations of cost accounting, the management accounting come in the pictures. Uh, for a cost accounting, for a few or limited companies, those are mainly working in manufacturing segment. For them, it is compulsory to prepare a cost account. Okay, whereas management accounting is not compulsory to prepare. In cost accounting, we use the database of financial accounting. In management accounting, we use the database of cost accounting plus financial accounting. The cost accounting is again at the lower level in the organization, whereas management accounting is at the top level. For installation of cost accounting, we need only financial accounting system in the organization. For installation of management accounting, first we need to install the financial accounting plus cost accounting. After the similarity between management accounting and financial accounting, that is not that. And the last point of unit 1, it is tools and techniques we are using in management accounting. First tool is budgeting. Budgeting is a process of preparing various types of budgets. Here we are preparing sales budget, production budget, raw material purchase budget, case budget, then after fixed or flexible budget, or at last we are preparing the master budget. So budget provide the all the information about the future period. So it is help us to plan the activities, event, and all the course of actions for the future period. Next one is standard costing, in which we first decide the standard for each element of cost, for material, labor, and overhead, and for sales also. And then we go for the actual data and we compare the standard with the actual data, and we find some difference, and that difference is known as variance. Number 3 is marginal costing. Here marginal costing means the costing based on the two component. One component is variable cost and second component is fixed cost. In marginal costing, we mainly focus on the changes in a cost in a variable cost due to the changes in the operation activities. Next, we have a ratio analysis. So many ratios are there. Okay. For example, profitability ratios are there, quick ratios are there, liquidity ratios are there, operation ratios are there. Okay, by calculating all the ratios, we can plan the future of the company. Next, comparative financial statements. In comparative financial statement, we compare the balance sheet and profit and loss account of current year with the previous year, and we try to find out whether it is increase or decrease in the incomes, expenditures, liabilities, and assets. Next one is differential cost analysis. In this, we try to understand the various part of cost analysis by calculating the difference in the present cost and past cost. Then after we have two statements, case flow statement and fund flow statement. So in case flow statement, we try to analyze the case inflow and case outflow during a particular period, and in the fund flow statement, we try to analyze the fund inflow and fund outflow during the. Next one is responsibility accounting. Under this accounting or under this tool or technique of management accounting, first we decide the authorities and responsibility of each department, and then after we compare the performance of all the departments. Next one is accounting for price level changes. This is also known as inflation accounting. Here in this technique, we are used the current price of all the expenditure and incomes to record the accounting. It means we are preparing the accountings as a present price. Next one is statistical and graphical techniques. So we use some graphical techniques and statistical techniques like as a graph, chart, diagrams, histograms, all these in management accounting as a tool. Next one is discounted cash flows, or also known as a present value analysis, that we have studied in the FM. Then after we go for the risk analysis. Two types of risk are there, business risk and financial risk. Then after the next tool is learning curve, in which it's represent that as we learn something, our experience is increased, and as our experience is increased, our efficiency toward the work is increased, and it will reduce our wastage and time, and it will increase the overall efficiency of the department. Next one is value analysis. Under this tool or a technique, we analyze each and every activity of a department, and we find out all the activities those are adding the value in the product or a service, and also we find those activities those are not adding any value in the product or a service, and then we try to remove that unnecessary activities those are not adding the value in the product or a service. And lastly, we have work study. Work study includes the two types of study. One study is a time study and second one is a motion study. In a time study, we try to fix the standard time for completing that particular activity, and in a motion study we try to reduce the motions of employee or labor as much as possible to improve the productivity of the labor. So this is all about the revision part of management accounting unit 1. Thank you.